Okay, so according to this application, it looks like I should be set to be live streaming right now. I'm just gonna double check my settings to make sure that I'm live. Because I figured, you know what? Um, since I'm already going to be marking up what is it that I'm doing with my day, I might as well just put myself out there. And, if there's anyone out there that has questions about I guess ICT, which is like kind of like where I'm learning from the things. And I'm kind of just trying to find my way still, learning about what the concepts are and how to make something out of it for myself. Right now, currently, that's what I'm currently working on. So feel free to drop in the chat, see what you think. I'm just gonna be marking up my charts here, and while I talk to myself about what I saw in the market. So first things first, let's see here. Let me pull up my weekly drawings. Okay, so normally weekly, I like to evaluate here on the 60 or on the 1 hour time frame, sometimes even on the 120, which is just 2 hour time frame. So each one of these bars represent a 2 hour time frame difference. And what I saw here was this high to low, higher, high. It's like a breaker. Excuse me, not a breaker, but a mitigation block, kind of a relative strength formation. So I had this theory going on that we will possibly react to something here on the higher time frame. Where are you? Okay, that this was our dealing range, what I was seeing here at the moment. And lately I've been looking at this guy's videos on YouTube. I think it's called Ali Khan, something like that. And he's been referring to type 1, type 2, type 3 dealing ranges. And I think that's been very beneficial in terms of identifying whether a trade is going to be a continuous trend or a reversal coming up soon. And type 2 dealing ranges, I noticed that tend to be forming something like this, where it's like a relative strength at first, but then later on in the future, after it has reacted off something from the higher time frame up here, or has created a swing high, later trades back down over here to meet its low. And something I saw here in the markets was that we were reacting off this um, higher time frame SIBI, excuse me, and we kind of just wicked up here. Formed our swing high. You'll see that 1, 2, 3 broke down lower. So that kind of has me a little worried because I had this idea that in the 3 month perspective, so the 60 days, I was really predicting that we were gonna probably meet up to these highs by June 26th. So that's kind of like where I was standing at this moment, that we were going to meet up here on June 26th. It's still possible. We can probably just retrace to something that's a discount. Maybe tap to this south side liquidity and then keep going up higher. Or we can reach down to this balanced price range right here and maybe reach the top or halfway and then keep going up higher. That's a possibility too. Another possibility, which I haven't considered, is, let me see here. So this is what I mean, live markings, right? You're seeing this raw right here, like just here looking at these charts, seeing this firsthand with me. Okay, so we have a low high. I see. I guess I don't see. Okay, so you're not seeing the markings, but there is a 15U that starts from here, ends up to here, to the 50% of this range. So it's low high up to here, right? Because then we open here and we start going higher. And then it's a higher low, higher high. So I would consider all of this a balanced price range. So I'm gonna move my block here. All of this is my balanced price range. Why is it balanced? The moment we opened up here, we dipped down lower. This was all buying pressure, buy side delivery. Traveled lower, sell side delivery. Traveled up higher, this little area is balanced. But why include the whole box? Because this whole side here was buy side delivery, later met with sell side delivery. See that? So I consider that a balanced price range. So price can easily just, starting from June 4th onward until the end, June 26th, we could even see a dip here to the medium threshold, maybe create a swing low, which fits nicely with this sell side liquidity, or maybe even reach the low here, right? Accumulate more longs, bounce off this, go up higher. Um, that's another possibility, another theory, but this is kind of like what I'm seeing at the moment. So let me update that. Dollar, not the dollar, excuse me, this is the ES. So we're going to see some SMT here. Where did I see that imbalance? Up here, right? This is the daily. Ah, right here you are. Okay, so the daily, we still also peeked into it. Made a 3 candle formation. Candle lower, we have swing high. So a swing high was formed. After we have broken the swing high, made a swing low here. So you could have made a high, we could have made some scalp trading right here. As soon as we had this formation, you would have looked at the high of this candle to be rated. So at the open, dip down, buy, aim for the high. Same thing here. Next day, look at this high. Following day, trade the open, near the open, break the high. Next day, broke the high again. Day after that, didn't quite do it, so it was a little bit challenging. But you'll see that we also created a swing high that broke higher, so maybe it's just to meet this imbalance, reprice to it. So yeah, this has, again, if you just joined, this has me like a little worried. The goal was to reach up here before June 26th. We're seeing price kind of do this swing high right now, so there might be a bit of a retracement down to either the medium threshold or the low of this balanced price range before eventually meeting up to meet the price up here. Kind of like what I'm anticipating right now. So we might see a little bit of a sell side delivery in these next couple of days, but very quickly reversed all the way to get up to here again to 22,655. And to be honest with you, I haven't gotten the time lately to focus on the dollar, so I haven't really been seeing what it's been up to lately. But yeah, this is my weekly dealing range idea, because I also identify this as a type 2 dealing range. And if you don't know what a type 2 dealing range is, this YouTuber I found called Ali Khan, really, it was just, he's like an ICT student, has really put things into perspective for me. And the thing is that I know what a lot of these PD arrays are. The problem is when to use it. And I think that's kind of like what separates the best students and the people who are currently learning with this guy, is that it's a matter of knowing when to use what PD array. There's a difference between knowing what it is and when to use it. So yeah, that's just my 2 cents. Like for example, when you're showcased a balanced price range, you know that's a balanced price range. sell side delivery, met with buy side delivery, balanced price range. And look, we didn't even get a chance to take a dip into it. Now, let's see here. Horizontal open, that's the goal. See what I mean? This is what I mean. I have too many markings. Orders, weekly. Control liquid. We don't need that. Yeah, we move it. We don't need this. Yeah, we don't need this either. That's okay. We don't need this either. That's the ultimate goal. So I'm gonna mark that. Sunday open. Don't know what this is. Let me delete that. That's the SIBI that I pointed out in the higher time frame. So you see we touched the consequent encouragement, repriced lower because we wicked in there. So yeah. So what does that mean for the weekly? What did we see in the weekly that caused price to create something like this formation? And I think what I would consider this week from the moment it opened to the moment it closed is that this was probably a midweek reversal. So we reached down to a Wednesday, made a high, and then we reversed back down, creating a close that was lower than compared to what it opened. So that's why I would consider this a reversal. And it makes sense because we touched a higher time frame PD array, a daily SIBI, and we only just retraced up here, matched the highest OTE maybe. I'm sure it is, no doubt, OTE right here. Look at that, 0.705 level. It was at 20, 21, 982.75, 21, 977. Okay, so about like 5 handles difference from this high to the 705. But we also got it right here to this 0.62. Right there. Retrace down lower. Nice. So then that's the OTE entry. So now I'm gonna look at the week. How's it that we behaved to get what we get? To get what we received. The formation here. Okay. So from here to here, buy side delivery. From here, from the moment this opened to the moment it closed, here, what do we have? We have a low high, higher low. So what's that? That is a breaker. Okay. So the moment we open on Monday at midnight onward, this balanced price range should be traded at down lower, reacted off the medium threshold, sell. Did we do that? No. You'll see here that we were actually using this as support. Using this as support, trade it up higher, changing the state of delivery, order block, buy. Going up higher. Where's the target? Up here. Is external range liquidity. Right here, dips down again into the opening on Sunday, displacement upwards. Trades back down, continues to treat this as support. Why? Because it's still relevant up to Wednesday at 8 a.m. So this balanced price range will be continued to be referred until we reached Wednesday at 8 a.m. Wednesday at 8 a.m., once we reach this side, we have to quickly change the narrative because price won't be referring to this anymore. So from here to here, we have a high low, and then from here to here, we have a higher low, higher high. So what's that? Relative strength, low. Okay. So now we'll treat this as a new type 2 dealing range. Quadrants. And then we'll extend this. I'll mark this down as red. This is our type 2. And we'll head up there. We reacted up that high. I'm sorry, that SIBI on the daily. 3 candle formation. That's a high. Sold, sold. That's our swing high. We're anticipating this balance price range to be used as something bullish. Maybe retrace up to the low, use that low, buy higher. Okay, as we were doing that, let me get rid of this. GMT open, we don't need that. Okay, wick down here, no problem, but can't be pricing down lower. So that's like your hint. The price probably doesn't want to head down any further up. This is, remember, now we have a type 2 dealing range here, so you're anticipating a small market reversal. Okay, heads back up to premium, so that would have been a nice entry because we closed, remember, we closed below the 0.25% level, so that's a hint. Also, after reacting somewhere higher, let's take a look at if there was any SMT formed here. Okay, so we have that high, lower high there, broke down lower. Okay, this could be something. Let me see here. How can I mark you up? This could have been something here. See that equal high? You can't see it, but from the moment it closed. This is US 500 now. This is closed at 6045.2, opened at 6045 flat. So kind of relative equal highs. Here we kind of broke up higher. And I know I'm comparing a CFD and a future contract, so bear with me here. Let's take a look at the, let's see here. Yes, futures. There we go. Great. Oh boy, I don't know what I did. What did I do? Okay. Okay, good. So we're back here. How can I add you? I know. Let's change this. Instead of comparing it to the Dow. There we go. Oh my gosh. There we go. Oh my goodness. Alright, so now what? Why isn't this part loading? Okay, so we had equal highs, but Price made a higher high here via close. See that? Closed, higher close. That way. Oh no. That arrow's annoying. See that? Higher close compared to its open. Here we had relative equal highs. Okay. Sold lower. I guess that could have been your type C. No, sorry, type C. Excuse me, it's type 1. Let's mark it yellow. Okay. Type 1 dealing range lower. You're anticipating a continuation. So we'll go up here to premium. Sold this SIBI right there. And this could actually have been your model 2022. Sell the premium, gap, wait for the placement down lower. And look, we tapped this low. We are creating this low 21,544 flat. Sorry, 21,546 flat. And then this low comes at 21,570 and a half. No, yeah, it tipped by one handle. Wow, look at that. I read that number wrong. It's the low of this candle. Let's see here. 21,471 flat. The low of this candle. 21,470 and a half. See how we dipped down lower? Amazing. Amazing. Wow. And again, type 1 dealing range, you expect a continuation trend to occur. Type 2, you're anticipating a reversal. So you want to use this dealing range, right? Because it took out this high, this low, right? This is your dealing range now. To sell short. Price reprices up, taking out these highs here, and this high right here by the FVG. Sold the imbalance to willing buyers. Short. In a moment of, we have this balanced price range trying to be used as a support, but it wasn't. So if it comes back down again, it should be aggressive. We should be selling through this quickly, which it did. And now it is an inverse balanced price range. So coming up, it should be demonstrating to us that it's willing as resistance. So that's really cool that it ended up happening the way it did happen. It kind of just proves that more that whatever this guy is teaching us is legit. I have been just so unlucky trying to follow trade stuff because I've been so busy at work. I don't have enough time to do these kinds of analysis where I'm marking out my charts and seeing things occur as they do. But this is a nice trade. Let's keep highlighting it. Just if you want to make a sell here, attach your stop loss to the highs. That's about 171 handles. It's good. Sold down lower. 2.6 RR. Really good, guys. Really good. Okay. That's really good. As well as, let's see if we can figure out a way to make this trade even more of an RR trade, right? Let's see. Higher RR. So let's go to the 30 minutes. So instead of the weekly now, let's look into our daily setup. Okay. So excuse the mess. Well, let's see if we can probably eye this. Okay. So on the daily, we have what? Low, high, higher, low. Excuse me. Low, high, higher, high. Great. We got to compare lows again. 21,732. 21,716. Wow. So this in itself was a dealing range as well. And we took up the high, then we took those lows. This is our dealing range. Okay, so this we extend this. Now, think about dealing ranges in the terms of like how I've been interpreting it is that if price wants to go down lower, we'll keep extending this. If not, we should be able to break through this if it was a reversal, come back down, react to 75%, buy, keep going up higher. If we're going to continue this trend, you want to go up to premium, see it fail, sell out of this external range liquidity. So again, let's see here, 76, 720, 716. So that's a higher low. Okay, so this low is still continuing to be protected. So let's see here, London, we got buy side liquidity. Trace down lower, didn't attack that low, priced higher. This is the IFEG or the inverse fair value gap. Okay, being treated here as support. 9:30 open on Thursday. Skyrockets the price higher, so that's sensitive imbalance, right? That we're looking to see it react from. Creates a swing high. Okay, but it didn't displace down lower than the low, so it's okay. Price goes up there, and look at that high resistance liquidity. Let me see if we can pull up our opening range gaps. Let's see here, how much of a gap was it? 60 handles, so it is conditioned to be a high resistance liquidity run day. So it's just going to be a little tougher to hold on to trades. Okay, head down lower, takes out the, what is this, New York lunch lows, trades back up. What is this? Oh, there's another org. Look at that. So there were stacks here. We have an org from ORG from Tuesday, plus the high sensitivity SIPI. Okay, so a lot of things are lining up here. We had that dealing range, as well as, let's do even a further analysis. Okay, hello, low. Okay, so then we also had here a another balanced price range up here. So this should act like a no, you should not cross kind of thing. Let's see here. There it is. Like no, you should not cross here. Until when? This is only relevant until 11:30 here. Okay, notice that price wicked up there. Okay, then we have a high low, lower low, higher high. That's our breaker. You want to see this as support. Okay, starting from what time? Excuse me, 11:30 onward. So from here, 11:30. From this point onward, this balanced price range should act as support, or should it? Because where everything that's pointing to is that it should sell. So if we're gonna come back down here, it better be quickly and done. And it did. Isn't that amazing? What's this? ORG. Yeah, let me put that away for now. Okay. Should be trades down lower. Over here. Order block. Amazing. So this accumulation would have been a little bit tough to trade, but Could have maybe managed it. Let's see here. Let's go into the 5 minute. You'll see that we had a mini dealing range continuation to go up higher. Where do you see the equal lows? Down here too. So I'm just looking to be focused here. Higher high. Yeah, I identify that as a breaker. Type 1 dealing range. Instead of a higher time frame, type 1. Okay. To 11, 10, high, low high, higher low. Higher high. There it is. There's our swing leg right there. This is our type 2 right here. Any more of a brighter color. Okay, so we're anticipating a market reversal. Down lower here from 11 to 12. That did not hit prompts, and then I will look at 10. Low high, higher high. Now we have a type 1 here. Price didn't want to move. Sorry for all the quietness. Maybe I'm not just as entertaining, but it's good stuff to just go over price. Well, it's very interesting. Okay. Let me get rid of these markings. Okay, racked up the civvy, lower. I like that. Okay, now let me get this thing ready, set up for Monday. But yeah, I'm anticipating this to be a type 2 dealing range where we will eventually hit down this low right here. Now, because we've created this new week, now we got to refer the playbook from low high. Yep, higher high, higher low. It's a breaker now. That'll be the new week, next week coming up. Okay. The Sunday open market should be seen everywhere. All right. Now, so we have that done. Great trades. And what's it called? I haven't really been trading, like scalp trading, because of my job, but definitely I've been seeking more day trades these days. Something that will get me into like a 3 hour range. So that's indices, right? Let me just get this set up for next week really quickly. So this will be considered for Monday, right? Yep, that is correct. Monday. So we have a high low, higher low, higher high. So that's what? No, higher low, lower high. This is the area that was balanced. We'll keep that for Tuesday, midnight. So all this, Sunday opening. Price should refer to this if it wants to keep going higher, which is also aligned with what? Equilibrium. Okay, it's going to be very interesting to see. Okay. Excuse me. Nice. Okay, so I think we're all caught up. We have our new weeks, we have our new days, we have our Asias, 12 a.m., pre-markets, ORGs, the 930s, first presented, lunch macros, first presented, and our PMs, first presented. And then we have our protractions. So one thing that if you're watching this stream, which I'm sure a few of you are, but if you're curious about the opening range gap, right? Something that I've been thinking about opening range gaps is that usually in the YouTube videos that we watch, they're usually referred to a time basis of regular trading hours, right? So we learned that in the regular trading hours, the opening range gap would be the close of yesterday's versus the day of trading's opening price. So this would be considered the opening range gap for regular trading hours. So that got me thinking, if there are different variants of gaps, so the new day opening gap has its regular trading hours variant, where we take the close at 4:14 p.m. and the opening at 6, and its electronic variant, where we close at 5 p.m. and open up at 6. The new week opening gap, there's two variants as well. There's a new week opening gap regular trading hours and a new week opening gap electronic trading hours. So these are two gaps, and they mentioned that he prefers the bigger one to be used as referred levels. So that got me thinking. Does the ORG, or the opening range gap, have its own electronic trading hours variant? Well, that's kind of like what I've been thinking about lately. And in the mentorship program, he mentions that if the dating range would be from midnight opening to 3 p.m. 3 p.m. Is when if the inner price delivery algorithm operates on. So if it operates between that range from 12 a.m. to 3 p.m., I got me thinking like, well, what if we take the close of that? Let's see here. What if we take the close of 3 p.m.? Where are you? 3 p.m. Right there. Right, because that's when the IPTA closes to the new opening at midnight. See that right here. So you'll see that we have now an opening range gap referred to from midnight onward, that these will be the levels that will be getting referred to for the day. For the day. So you'll see that price higher, they didn't tap the low, broke a quadrant. Okay, this shield should be protected, traded back lower, busy. Okay, see that quickly reprice action, closed above the 50. This should be protected. Going up higher. Okay, Sunday open, SIBI, swing high, close. Okay, concerned now, right? Now we don't see this. We don't see this level as protected anymore. Close down there. Inferred order block, trades back up to Sunday opening, trades back down lower, refers back to this level, takes out the AM liquidity session low, low, and then look, we close around that area. So we had an open, low, high, close. So if we were to zoom this out in the daily perspective, will we see a bullish candle or a bearish candle? Just a question. Yep, you'll see this hot mess. Well, because this refers to the opening at 6. But I bet you if we see this in a regular trading candle, I'm sorry, not electronic. If price refers to a 12 a.m. open, we'll be seeing this as actually a bullish candle. So open, low, high, close. See how that close is higher than the open? This will be a bullish candle. Trading view reversed to 6 p.m. as the opening. So from 6 p.m. onward, we had the opening, high, low, close. So of course, you're going to see this as a sell candle. But I see this as a buy candle, as a closing. So that's just something that got me thinking about how price refers back to these levels in terms of a opening range gap and a opening range gap based on electronic trading hours and what's referred to as regular trading hours. Like this one right here. This is ICT's famous opening range gap. So from the close at 414, right, to the opening at 930. That's the gap that he refers to. And he says that in the first 30 minutes, you should see price refer back to the consequent encouragement. Did we do that here? Nope. Price traded down lower. Okay. Reacted off this quadrant level. Bullish up. And it treats it as a consequent encouragement. But we also have other opening range gaps here as well. Let's go encouragement again. Trade some lower. Order block, sell. Order block, sell. Mm-hmm. I need to come up with better color ideas. Very good. So lots and lots of confluences and bundlings of price that can help us see price action. But enough about NQ, right? Why don't we set up our markings to the dollar? Because it's been a while, you know? And it's important to track the dollar so that we can determine whether we should be in a risk on or a risk off scenario. And the last time I analyzed the dollar, oh boy, has it been a while. It's been since, yeah, since March I last analyzed it. And it's interesting to see how far price went to get down to that liquidity. Oh boy. So you're in luck because what we're going to see right now is me marking up the charts so that it can be up to date with everything. I'm going to get rid of this now. And we're going to refer to the point levels that are, I believe, are the important ones. Okay. So the first step in determining anything is what is this range? So from here to here, 60 days. So the next 60 days from here, we'll get, should be June 20th. Okay. So we'll get this, clone it, June 20th. Okay, there we go. Then we'll move this up a little higher to refer back to these levels. And then we'll keep our, what I like to call my turtle soups, highs and lows. And the 60, right? We'll delete this. Delete this. I'll keep my imbalances now. 20, 40, 40 and 60. 60, 20, and I think it's 10, no? Yeah, 10. And then it's 15. My gosh, I'm confusing myself. 60, 40, 20. Okay? 60, 40, and 20 are like my imbalances that are going to be used to reach into external range liquidity. 30 is 20 and 10. Okay? And it's 15, 10, and 5. That's the one I'm not having. That's okay though. If you don't know what I'm talking about, don't even worry about it. That's just a me thing. It's kind of like how I've been learning to interpret price. So we have a low. I'm sorry, no, we got to refer to this. High, low, lower, high, lower, low. So what's this? Where was it? Where was it balanced? Here. So from here to here, should have been balanced. Where is our external range liquidity? Right here. Past. No, I'm sorry. Since we still haven't finished this, we have to refer down to these two. So I knew something was wrong. Low, high, higher, high, higher, low. Which area was balanced? You have a breaker. This sell side delivery, buy side delivery. Higher, high, higher, low. So in this candle here, we'll find our bearish breaker. But we don't even have to worry about it because it wasn't even used. Okay. So what does this mean? Okay. Now we'll take it half. High, low, low, high, lower, low. But because this lower high was eaten up, this one, the candle at February 13th, was eaten up by the high of this candle, I'll refer to this moving forward. Up to when? Up to May 9th. But now we're not at May 9th. We passed it. So now we got to refer to the one high, low, right, low. Ready? Lower high, lower low. See that? Until May 9th, we're referring to this candle right here. So what was balanced? This. This was balanced. Premium here. And then lastly, we have this. Okay, half of these two numbers is a 25%, 50, 75, 100. Okay, so then we'll do this. Low, high, higher high, higher low. We have another bearish breaker here. See that? Okay. You see that when we opened here, 75, we didn't refer back to it. So what this tells us, price is really weak and it's trying to get somewhere. This tells us a lot, you know? Okay, now, let's see here. In terms of the 20, we have 20. Okay, so from this onward, where's our gaps? Here's a gap. See that? I use that as like a way to highlight what gaps will be relevant for price to use to target external range liquidity. But in this case, external range liquidity has already been left behind. This is up here. So we're really deep discount. Oh boy. Excuse me. I'm just trying to mark up my charts here. Okay, and I won't even be using these. That's too much of a short perspective. Alright, so that's the dollar heading down lower. Ooh, there's another one I do. Yep, there it is. I thought I didn't have it. It's the yearly perspective. So every year we gotta compare just what the heck has been happening with dollar. This is good. I thought I deleted that, so I'm glad I did it. So this will be used until, oh my gosh, 2026. So we'll do January, December. There we go. Okay. So now what happened here? What's balanced? We have a low high. Ooh, higher low. Higher high. See that? Folks, this is a yearly time frame. So we're referring to the freaking year. This is huge. Now it makes sense why it's doing what it's doing. Remember what I told you about balanced price ranges? If they're not going to be used as support or resistance, respectively, we want to see speed and look at that speed to cross. This is fascinating, folks. I still get surprised when I see these things come to fruition. I'm like, whoa, was this planned? And now I can see why people think that whoever controls this market, it's just manipulating everything. It's crazy. Again, so we have a low high, higher low, higher high. So what do we get taught that is? Type 2 dealing range. Anticipate what? Reversal. Where? External range liquidity lows. You just saw it. We just saw price being met. Speedingly. Speedingly. So it's just, this is something else. Now, I'm going to analyze the half a year perspective. Okay? I'm going to analyze this 50 here. What do you think is going to happen to Forex? Like, this is going to keep going down lower. I'm curious, how low can we go? Well, to project how low we're going to go, let's do quadrants. Take this portion out from 102.28. Okay, let's get this accurate reading. 102.228, 2.228 to the low here at 99.477. Okay, we're gonna extend this where? Down. 9572. There it is. You know what? Let's just use a calculator to get the most accurate reading. I love math. 102.228 minus 99.578. So that's about what? 2.65. So then we'll attach this, the high here. $6.12. Okay, and then the low. Sorry about that. Sorry, I have some music playing in the background. I'm trying to focus here. Oh, come on, Windows, work with me. Okay, great. Now I forgot what I was doing. So 2.65, right? 2.65. So now we'll do 2.65. We should be reaching to 6.488. What? What am I talking about, dude? It's see what I mean? What happens when I'm so distracted? Okay, okay, minus 2.65. 96.962. There we go. Now we have the actual low here. And let's celebrate that with a nice little, what do we say, 962, right? Yeah, 962. So that's our goal. Calling it right now on live stream. What year is this? 2025, January, June 14, excuse me. Before the year ends. Sorry, before, yeah, I think we're going to reach down here before the year ends. Wow. We'll add some stars here when it happens. So what do you think is going to happen? There's going to be a lots of risk on scenarios to keep going higher until we reach this. Then we'll have high, low, higher, high. Okay. Oh, look at that. Perfect time to showcase to you what is it that I mean when it comes to dealing ranges. So you'll see that we create this high, right? And we'll mark this yellow for you to see that price once broke out of its A leg. So we have the A leg, the B leg. The B leg meaning that it's the extension from the inception. The A leg is the inception of the dealing range. So once we came back down and broke the external range liquidity, the A leg, coming back up, we should reach the 75% level. In some cases, the 50, but that's not required. I prefer it to be up to 75. Head down lower. And you'll see that we just barely missed it by a bit. Created a swing high, so see that? So that means we're really in a hurry to get somewhere. And we just told you where. Well, I just told you where. Down to 96.962. So that's gonna be where I'm anticipating price to reach for. That's our draw on liquidity. Keep the middle line. We'll keep this. We'll get rid of that, and then we'll just do 30U. Okay, there we go. What's this for? The fibs? Oh, this. No, okay, perfect. What's this? Projection, goal. It's gonna go in the yearly folder. Wow. Now, something I'm interested in learning more about is how do I apply this knowledge so that we can use it on other indices around the world. So, for example, we got the German E25, we got the Hang Seng Index, the Hong Kong 50, the Australian 200 Index. This is the Australian. It's the same thing. It's just a CFD. Then we have the FTSE. That's the CFD of the FTSE. We have the Japanese 225, which is the same as. Oh my gosh, I can't remember it. Let's see here. Let me Google it real quick. Japanese 225. The Nikkei. Yeah, the Nikkei. So you know what? Let's get organized. Let's pair this with what they need to be. Hang Seng Index. What the heck is that? I think that's China, no? So there's always an opportunity out there. Hong Kong. Oh, okay. So if it's the same, we'll keep them close together. Bet you one of them is the CFD though. I think this is the index. This is the CFD. for Hong Kong. Then we got the German DAX. I wonder what their CFD is. Ah, here it is. DE40. It's probably this. So we'll add this to our. Okay, then we have the Australian CFD here, Pepperstone. Then we have the FTSE, which is just the UK 100. And then we have the Nikkei. Nikkei. This is the cash, this daily, and it's a futures. It has to be a futures, no? Probably does. NDK. Oh, NKD, sorry. And then we have the Chinese. Okay, CN50. Let's see here. This should be. No, it's just called CN. Okay. Index futures. Perfect. So I find this very exciting, to be able to see that we have endless opportunities to apply these concepts. So we got everything from Chinese, Australian, Japanese, British, like it's endless, And then these are active around, around the clock. So whenever Asia's open, expect the Asian markets to be active. When London is open, expect the London to be open. It's crazy. You could literally be anywhere in this world and be having the opportunity to make money. It's great. Anytime, anywhere, literally. Let's see. We got Japanese. Yeah, we have the Nikkei. Yeah, Nikkei. Then we have the UK one, which is the FTSE ticker symbol. That has to be what now? FTSE? I don't see it being. Oh, okay. So we have the E-mini, and then we have the FTSE 100. What's it called? That's the cash market. Okay, so that one we can't find. But, that's just what I want to show you today. Like the opportunities of making money in other markets just shows that we could probably be, having more access to more opportunities around the world. And it's all correlated, When one of them is being affected, their currency. Think about their currency. We have the yen, the pound, the Australian dollar, the Swiss. All these things take into effect, and I really want to get good to reading price and be start to be more active in these markets to truly understand what is going on behind the machine. So I'm going to screenshot this and refer back to it. Awesome. What an amazing capture. Perfect. Okay. All right. Are you liking this live stream? I know it's not. It's pretty lackluster. You're just seeing someone mark up the charts, but I figured I'd get the ball running with that. But let's see here. Yes. So this represents the traits that I was looking for during the CFD. Now you're not supposed to trade. I'm simply using these as referred levels. But no, I don't trade CFDs. I just use these on demo accounts. For example, like FTMO. You should just go make a demo account, which I probably should make another video on like how to do that using the FTMO servers. But no, I don't trade CFDs. I use them simply for levels, like just referment to levels and just practicing on my demo account. Don't make any real life money. So whatever you see here are just ideas that I was using to get into trades. You see that here on Friday, we had that big displacement up higher. I thought that because we had closed up to 25% level, the type 1 daily range, we would have seen a continuation. Hang on. Upwards. See, this is what I mean, because my job gets me so confused all the time about what it is I'm supposed to be doing, so I get distracted. Oh, I really need to come up with a better way to analyze charts and juggle these lifestyles, because this is hard. Yeah. So, because there's a lot of drawings here, I want to simply restart. I want to restart my drawings and get them started again. Okay. Now we'll just have, oh, sorry. I'll keep my daily ranges. Keep you to come over here. I'll delete all of this. I don't need this. So I'm just stuck here with my daily range. Let's mark this up, no? So we have our goal here of a market reversal. And again, this is crazy. This low was kind of predicted too. It's like, well, if we dip down lower, I expected an immediate reversal on this. But for the year, it's great that that's panning out. Oh, that just reminds me. I should probably look into the futures contract and analyze the yearly perspective as well. See, this is what I mean. The high-low, this area was balanced. It was going to be referred to for the whole year until 2026. That low, perfect time for turtle soup. Dips down lower, immediately reprices up higher. So you would have had something like this. Folks, this is the yearly perspective. Now, the thing about the yearly perspective is I don't know what would be the respective stop loss for something like this, but you would eventually want to aim towards something like that. Look at that, 1,500 handles. That's crazy. Would have been holding since April. Would have been already June. Wow, it's crazy. About like 3 months for this freaking trade. But it just comes to show, that price is fractal, and price will eventually end up repeating itself. This takes a lot of effort. So I think I'm gonna go for another like 15 minutes and then see how it goes. All right. Excuse me, I'm thinking about what is it that I'm doing. There we go. I'm looking into the midpoint of the year. So let me just get something like this. Excuse me. Okay, that's nice. High, low, higher, high. We have a type 2 dealing range from here to here. This is a bit of reversal. It did. Okay, now we're about to reach half of the year. But I'll still mark it up anyways, just to show. Let's see that. Let's break this up again. I'm liking this too actually now. Gives me the price as it is. 18,109 and 18,109.81. Oh, so it's actually a little lower. Okay. Oh no, I'm sorry, but we're referring back to these levels, so we're good. Yeah, we're good. So we have a low, high, higher low, higher high. Yep. So then, yep, that's our type 2. Sell down lower, reach to external range liquidity, prices up higher. Why? It's turtle soup. We want to see the yearly external range liquidity. So this is what I'm looking at, right? You have a low high, higher low, higher high. From this point to this point is your open flow. From here to here is my external range liquidity. So is that going to target where I have my stars or this one? Because I've been studying these formations about, breakers, failure swings, relative strength, after a while, you start seeing that at the time, relative strength is one of the most powerful swing uh, swing highs and swing lows that price can create in order to create more. That shows more strength, pretty much. It just shows more strength. The thing about relative strength, though, is that when it starts to move a buy program, that move lasts for however long it needs to take. Coming back down for it, though, is an easy target for price to reach to. So at this point, we have relative strength in the Nasdaq market from this low to this high, higher low to this high, right? So we anticipate price to keep going higher, but when it comes back down after it meets this external range liquidity, it should be a lot easier for price to reach down if that's the playbook for you know for the dollar, which we saw that it can potentially reach down to those sell stops based on the projections. Then it'll reverse, keep going high, and then we could probably even see this meet its target as well, only to go back down lower. That could happen, guys. Again, anything can happen. But of course, based on what we've been studying lately, this is kind of like even more higher time frame stuff. This is the internal range liquidity from this low to this high. So we're taking half of this open flow. So this should be considered our 60. I call it 60 units. From here to here is another dealing range, right? But I like to refer to it in conjunction with these two. So from here to here is another range, but it's internal. Why is it internal? Because from this low to this high is inside of this low to this high. See that? So this I refer to as my internal dealing range. And what price tends to do is to use this liquidity from internal dealing ranges and use it to target external range liquidity. Sorry. So in this case, you see that once we had created this high, price did not dare to even challenge the external dealing range. This high is important because it could be used for both internal and external, but I'll explain both. So since this high is both considered an internal range liquidity because it's based off this high and this low range, if price were to have dipped to the high here earlier, to the internal range liquidity, it could have been used to target this external. But since it didn't, we're using it to target internal first to target external. So price has to aim for first internal range liquidity before it can aim for something external. So if we were in the belief that we were going to head down lower, price should have created like a breaker, like a swing high. Oh my gosh. Like it did here. See that? Price created a swing high. To head down lower. NQ didn't do that. That's also very interesting, right? But if NQ did, I would have liked to have seen it use internal range liquidity to aim for this sell side. But it didn't. It instead kept itself contained while ES created that higher high. So there's a cracking correlation right there. Aim for internal first. This internal, from here, this range to this range, will be used to aim this. That's kind of like the logic that I was going for. And it's great. Okay. It's great. Yeah, I don't know what else to add. Alright, so then that's our 30U for the year. Okay, we have this dealing range here. I'll remove it for now. And then lastly, we have the quadrants. Where are you, quadrants? Oh boy. Low, high. Mm-hmm. Interesting. So see, for this, we had another type 2 dealing range right here. On the yearly, guys. This is the yearly. So we anticipate what? A market reversal. That's why this high makes sense. Boom, boom. Yeah, it's beautiful. And look at how we're referring to the quadrants. If this was going to be our swing low, notice that we priced down lower. We have SMT. Let's see here. What's the low? This is the low. So we'll match that low with this low. Oh, look at that, guys. Price didn't even dare to challenge this low on ES. But for NQ, it dipped down lower with its bodies. So did we have a stop run or a stop rate? Let's take a look at this in a higher type of perspective. We had a stop run. No, we have stop rate, excuse me, because price closed and opened with solid candles. But price didn't even do that here with ES. That's SMT right there, bro. That is SMT right there. So we're creating that low, close to 25%. Then what happens? What did they teach us in that video? Once it closes 25%, that's like your signal. Now you gotta enter. Order block, rejection block, swing low. Where are you gonna enter? Medium threshold. You enter here. 25%. Where's your stop loss? Just below external range liquidity. Where's your target? See that? This is crazy. It's just, it all is just so, it just works well, so cohesively. It's just a matter of figuring out the time of when to do something, knowing the kill zones, learning the macros, controlling your emotions because you just want to keep getting in there. And that's kind of like the problem. I just want to get into everything. I feel like I am confident enough to do it, but then I get my ass burned, and then I'm screwing. Well, I get burned, and then I don't want to do it again. But then it's possible. You can totally do this. I'm learning it with you. Look at how long I've been online. I've been learning. It's not easy. It's hard showing up every day, but this is the kind of stuff that motivates me now because I'm seeing it, and it's really encouraging. That's these are the kinds of moments where you want to refer back to and give yourself that boost. Because when you're down another 5 trades in a row, it looks like it's the end of the world. It's not going to work out for you, but you got to believe. That's why you have to believe that you can do it because you have to refer back to these days, the days when you're having fun. Like right now, I'm having fun looking at prize live streaming. It's exciting for me to go back to refer to these levels. And like I told you, it's been a while since I've done this, so it's like I'm back to playing video games again. It's a good joyful moment. Like wow, look at what I've been missing. And this is what Price really has been trying to tell me. So good emotion, man. All right. And then what? We pierced about 50% here. All these imbalances should be considered breakaway gaps. Okay. Where's our next entry? Down here. 50%, but did we retrace it? No. We kept going up higher. Where is that new? There it is. That's our new dealing range. Type 1, too. No, type 1 as well. Inside of what? Type 2 dealing range. So we're going to expect price to dip down to discount. Did it? Oh, sir, it did. Yes, it did. It dipped into discount. That's all it needs for price to keep going up higher. Forget the swing high. It's already done. What's to say that by Monday we'll create a swing low, maybe a little consolidation. Tuesday we expand up higher. That can't happen. That also can't happen. So let's see here. This looks like it was a good time. I'm gonna be back testing a little bit more on this. If you like this video, do like, subscribe, all that stuff. But I'm gonna be testing out some things that I've been learning about and just trying to get things more organized in my life because I'm glad I was able to sit down today and just catch up with the market, see what it's been trying to do, see what it's been doing, and all in all, just trying to be more organized. You see that my folders are not the best; things could improve, but at this time, this is all I got. And yeah, so if you enjoy it, let me know. Have a great day, everyone, and I'll take care.